Welcome to the Swing Trading with Cycles channel. We're going to do an update on the broader markets today. It's January 25th, 2023. So we're going to look at the S&P 500, the Nasdaq 100, the Russell 2000, and the Dow. And we're also going to review which of these three indices is outperforming the other three. Or excuse me, which of these indices is outperforming the other three. Because once we confirm that stocks are in a bullish mode, then the next thing to figure out is where do you want to place your bets? And obviously, we have the Fed meeting next week, right? It's like almost actually exactly 1 week to the day, right? It's Wednesday. We're going to have the Fed meeting next Wednesday. So let's start with the daily chart. This is the S&P 500. And you can see here, we so far have a top on day 19, which was Monday of this week, the 23rd. As of today's opening, we made a swing high we basically made Monday a swing high. The catch is that we've now rallied back to above where the swing high occurred. What I mean by that, like, what the hell is he talking about? And for more background, definitely take a look at the pinned comment. That's going to have some links to understand more detail about swing highs, more detail about swing lows, cycles analysis, price action. That's what we do on this channel. We use charts to analyze trends. Candlesticks are just a visual representation of price ranges, and that allows us to understand what direction price is trending. And so really a big important signal when price makes a swing high, it means it's about to start a downtrend. The swing high is how a downtrend begins. A swing low is how an uptrend begins. And so this candle on Monday made a high. This is the S&P cash at 4,039, right? And the low for that day was 39.71. We crossed below that level, 39.71 today. You can see from this wick here, right? But now we've recovered. So at one point, this candle was bright red and it had made a lower low. Now we're above that level. And so you can start to think about that level as a line in the sand, right? That 39.73. And I like to think about them more as zones than levels. So what does price do when we get to around there? Are we able to stay above that level, that zone? If not, it could mean that this is our daily cycle high here on day 19 and we're going to begin to decline, just as this was our daily cycle high here on day 42. So this was a pretty long one. And you can see for this daily cycle, you had these false starts, or I should say these false, like that looked like a daily cycle high in real time on day 23, didn't it? Right? Like that was and this was a swing low, to be clear. This day we made a high that day and then we made a low below that and it looked like, oh, okay, we're going to go, nope, we're going to make higher highs. So you always want to be vigilant of that, right? Which is exactly what happened. Like today, this is a false breakdown. We broke below this level and now we're recovering. We still have quite a bit. We still have like 3 hours to trade, so a lot could happen. We could get a reversal on a lower time frame back down. So this is the hourly chart, just to show you where the reversal happened. So this is where we opened on the day, gap down opening, right? Red. So we opened here and then we sold down, but then we stopped. We reversed a little bit. We know that from this lower wick. A lower wick is always a pullback on a lower time frame. And then the next candle was almost a bullish outside candle because it started as a lower low and it almost also made a higher high, but it could not complete the job. But the next candle did. So you can think of these two candles combined, right? Like you can literally kind of draw a box around them. Like they are, those two candles together form one out. Like those if you put them together, they would be one bullish outside candle, right? Because they made a new low and made a new high. It's an important pattern to kind of understand, and it doesn't always end on the same candle. So right now we're making higher highs. We have a little uptrend on the lower time frame. So unless we make a lower low at this point, it would be below this candle here on the hourly. So that's below 39.79. We're still good. So that's the S&P 500, and that's that. So that puts us on day 21, right? And it looks like we're gonna make a new high for the daily site. Like we're gonna go, like this is a reversal, right? That we're gonna go and challenge this high up here. So again, that is at 40.39, and then you have the weekly chart. So here's the kind of fly in the ointment a little bit. We're getting kind of late in the weekly cycle. So we have this high on week 9. That was the week of the Fed, mid-December. And I said in real time, this is about as bearish a signal as you can get. Like this is a huge sell signal. And you can see I have these lines drawn because everything between these lines is inside the range of that big down candle from that Fed week. And you can see that's the candle the blue line is always a 10-period moving average. We also closed below the 10-period moving average as of that week, right? And then we had 2 weeks of basically consolidation. Then we're trying to reverse back up. This was a little pullback, i.e. a higher low, right? Like notice, just that's important. That's your low. That's a higher low. That's another higher low that we just made here. So again, so you have to know your time frames. Don't get like, there's been a lot of shakeouts, especially on the lower time frames. If you're like long for the weekly period, this is probably around where you want to think about your stop, right? Like below this level, that's like 30, 80, 85. Below that, then you can see some pretty big selling. And we're obviously way above that here. So it's about your risk tolerance and what time frame you want to trade on. Also notice we're above the 10-period moving average. That's good. I would notice here that this weekly candle is a doji so far. It's week 15, as I said, so it's getting later in the weekly cycle. But next week you'd expect an inside week to open at least. But again, we know we have the Fed meeting, so I would be shocked if the candle next week closed as an inside candle. So the high for this week is for that 40.39 we talked about. The low is 39.49. Unless we make some kind of new high or new low in the next 2 days of trading, we're probably going to open the next week inside that range consolidation until Wednesday, where we'll obviously rocket up or we'll shoot down. And obviously it'd be great to know in advance which direction we're going to go, but we're not fortune tellers. All we can do is observe price and react accordingly on multiple time frames. So that's the S&P. And if you look at, the last thing I'd say is always good to know where we stand on the monthly chart. Given that we only have like 4 days left to trade in the month, you have to start to think about what is the February candle going to look like. And so notice, if you've been watching these videos, we talked about how as December was closing, December was an ugly month. You can see it was a big red month. We talked about how the way it was closing, we were on pace to open as an inside month. The same way we just talked about how next week is on pace to open as an inside week. It's important to start thinking about these things ahead of time. And so what happened this month? Nothing. Which is to say, we are on pace to close as an inside month. We opened as an inside month in January, and January is on pace to close as an inside month. I hope you're seeing that. Like, this is your big red candle from December, a high at 4,100, a low at 37.64. That's a huge range. So it's not shocking that we remained an inside month, but it's important to know that, like, there's no reason to get super excited, bullish or bearish. Like, we didn't get too much of a signal here yet, right? Like, so far we have a series of lower lows and lower highs, right? This being a potential next lower high. We need to break above that. So what we're looking for in February to be bullish is something like that. And if you want it to be, and a bearish outcome would be something like that. It's really that simple, right? So to try to pretend that we know what's already happening is just not, like, that doesn't make sense. Like, let's just wait and see what happens, right? Like, that's all we can really do. Like, let's wait and see what happens. Right now, I would say we're leaning bullish, certainly. And I say that because we're in an uptrend on these lower time frames. But the monthly isn't giving you a signal yet. That's so important. I hope that, again, the other thing to note, super, super important, December was also an inside month of November. Do you see that? Well, just barely, right? Wait. So the high, right? So December made a slight higher high above November, but we've basically been inside the same range for 3 whole months. And not to belabor the point and draw too many lines on this chart, but, like, look at this. Well, what the heck do you know? We're also inside the range from September, right? What that's telling you is this big downdraft that we had starting in January of 2022, the beginning of that year, it really slowed down dramatically in September, and we've really just been kind of consolidating since, right? Like, now, again, to be fair, we obviously made a lower low in October, but this is a slight lower low versus November, right? And if you really want to quibble, you can just kind of combine those two, right? So this is the range, right? That's a ginormous range. So there's a lot of money that could be made on either side. Like, you can make money right now. Obviously, you can make more money playing to the downside of the range at this point. But if we're going to get a violent reversal to the downside, we have our sort of sort of field of play, if you will, over here. Very, very clear. And so it's going to be really interesting to watch this, and I'll certainly be keeping everybody up to date on this channel. Let's talk through the other indices. We'll go through them relatively quickly because it's a very similar story. I do want to talk about which ones are poised for relative strength because that's the exciting bit. So QQQ, it's the same structure really, just different counts. So the swing high for QQQ right now is on day 16, but again, same idea. It's rallying back after this gap down opening on the weekly chart. For the Qs, same kind of idea. It's going to be an inside week next week, unless we break the new lows, which is possible. So the low for this week is 281 and the high is 290, so about a $9 range there. And you can see same exact idea. Monthly candle is an inside candle from December. That is basically an inside candle from October, right? Or excuse me, from November. And all of that is inside the range of a combined candle between September and October, right? Like that understanding of like the big picture price action is critical. So all of this is just chop. Like imagine a world where we just continue to print candles inside this range for the next year. That could happen, right? That wouldn't be a waterfall down, but it certainly wouldn't be super exciting buy and hold long-term investor. I'm just going to compound my money kind of situation. It'd be a disgusting kind of choppy mess. So we have to think about that as a third scenario, right? Like we could get a waterfall down lower, or we could get a V-shaped sort of reverse symmetry move, or we could get this kind of choppy mess sideways to be sure. What about IWM, the small caps? Again, same structure. In this case, the top is on day 13. This is currently day 18. Inside week setting up for next week. And these are all on week 15. So getting late in the weekly cycle. IWM is much closer to the previous weekly highs here. So that's like right around 189, 188. It looks like above that level, you could get a nice little breakout, right? To like kind of retest the 200 area. So that's interesting. And again, same exact story for IWM. It's really just been kind of consolidating inside this box for all these months. I mean, you can see that, right? Like, and that could be an outcome that we get that would be kind of frustrating. But if you understand the price action, certainly tradable. And finally, we'll do DIA. Then we'll look at some ratio charts. So DIA it topped out on week 13, on day 13. It's currently day 21. That one is the greenest of the indices. No, very little upper wick right now. Look at that big bullish hammer forming. The little bit of a fly in the ointment here is that this is a deeper inside week. Like the other ones are like closer to the top end of the range on the weekly chart. Here we're pretty deep inside the range of last week. And so we really need to get above 342.75 to get anything going here. Also week 15 for this one. And a similar situation for the monthly. Look, the monthly is closer to going red. Although we have only 5 trading days left. So that's maybe like the saving grace that we're going to kind of get out of it before it could do too much damage. But then we just need to get out of this big range on the monthly, like between 350 and 325, essentially. Now, in terms of the ratio charts, which in this index is looking the strongest compared to the others? So without further suspense, I have to submit that the QQQ in the index is starting to show something special. So let's look at the daily chart first. Actually, let's look at the monthly chart. So this is the monthly chart of the Qs versus the S&P 500. So QQQ versus SPY. And you can see pretty massive uptrend for a really long time. And then it tops out. You have this kind of vicious double top. So you first get it like a major swing high in February 2021. You get 3 months of downside. But then you rally all the way back. Now you do make a higher high, but only a slight higher high. And then a bigger deep decline, right? So again, this is your sort of epic double top here. Boom. Oh, well, this is a slight higher high, to be fair. Now, we have this green candle forming in January, threatening to become a bullish outside candle. Would need to get above here, right? Because it made a lower low, right? Such an important concept to understand. And again, this is the ratio chart. So this is showing you when QQQ is outperforming SPY. And so We are on pace to make a bullish outside month to close January. And then the next move would be to try to reverse this massive downtrend that we have on the monthly, right? Like you can see it clear as day. We make this, we make a low, lower high, lower low, lower high. Now we're making a lower low. We could always also come up here, make a lower high, and then another lower low. But even in that environment, you could make more money when the QQQs, let's say, in the next month or two, right? Like maybe all we get out of this is just another candle, another up candle like that, right? Before it rolls over the following month. Like you can imagine a scenario like that, right? If that's going to just be a lower high, something like that, right? But even in that scenario, obviously you can make some good coin there. And so you have to be on guard for that kind of thing. But so far, this is trying to show the potential signs of a big bottom. Now, notice that happened here, where we made a higher high above the previous month. You had this downtrend that looked like, oh, maybe we're reversing it. You even got followed through the following month, but then it failed, right? And so entirely possible that we get something like that. We're going to want to watch for that. And you can see on the daily level, we're like really new. Like this has only been rallying for 11 days is our top, and right here so it's up to this point here is 11 days, so this is day 12, and it looks like we're going to go and retest this, right? Like so basically as stocks pull out of this swing low they just made, QQQ probably continues to outperform. And so this is only 11 days so far, right? Like let's just mark that. And just for reference, you can see these other little rallies, like this bear market rally that we had, when was this? In June. QQQ managed to outperform SPY for 47 days. So that gives you a good indication. This was a much shorter one where it only did for 14 days. So this is an indication. This is only rallied for 11 days so far. So you could easily see a world where, the rally continues into like even late February, even if this thing is going to roll over again, just like we talked about, maybe get another green month. So that's important to know about in terms of getting bang for buck in terms of sort of short-term trading. So that's the lay of the land for the markets. Definitely a bullish lean here, but the Fed could turn everything upside down next week. But right now we're in an uptrend. For the daily, we're reversing right now after a gap down opening. So longs is what one should be looking for here, in my opinion. That's all we've got. I'll leave it at that. Thanks for watching.